So we saw a little bit of that crypto volatility over the weekend, and this is when, Bitcoin dropped all the way from around 44,000 down to around 40,000 within the span of a few minutes, and then, obviously picked up some bids and picked back up a little bit. But this happened really fast. And for those that are kind of new to this, here's kind of an idea of what might have happened. Okay, one, on the weekends, we usually get less volume overall, and a lot of times we get bigger price fluctuations. And that is because people, over the weekend, especially here in the US, are not trading as much. There's just not as much volume, not as many people watching over the weekend. So we tend to get a little bit more volatility on the weekend when there are big price moves. And that can be to the positive or the negative. The other thing to remember about Bitcoin, about ETH, about other crypto assets is they are traded 24/7, 365 all over the world at exchanges all over the world. And some of the exchanges don't have the same rules that we have in the US, meaning there are people who can get 10, 20, even 100 times the leverage. And so when they are potentially trading, and what we saw was 8 straight weeks of up moves with Bitcoin. 8 straight weeks Bitcoin finished higher than it had the week before, and you had the talk and the thought of what's going to happen if there is a Bitcoin spot ETF approved. And I think what you probably had is so many people around the world getting so highly leveraged, so much leverage on their Bitcoin trade, that as soon as it starts to cascade down a little bit, as soon as maybe even on the weekend we see a little bit less support, for Bitcoin and for other crypto assets, coming back down just a little bit, when there's a little bit less support, you start to see positions get liquidated, start to see over leveraged positions get liquidated. And once they get liquidated, of course, that means they have to sell their position. And when they start to sell, that brings the ask down, and then that starts this cascade, because if that happens on a market that's, say, in Europe or Asia or somewhere where there's quite a bit of leverage, and they automatically get liquidated, the positions automatically start getting liquidated. You have trading accounts where people have set stop losses, those start getting triggered. Remember, Bitcoin, ETH, it is the same asset. It is the same wherever you are in the world. So when one starts triggering prices moving down because of liquidations, because they're having to sell Bitcoin because positions are being liquidated, that causes the price somewhere else, so maybe in the US, to drop as well, because it's got a match, because there's arbitrage going on there. And so because we've never had an asset that trades 24/7, 365 like this, where in other parts of the world it can be over leveraged, that's where we sometimes see this huge potential down volatility. I think we had somewhere in the neighborhood of 210 or 220 million dollars, it might have been a lot more than that, worth of liquidations within like a 1 hour stretch. And again, what that says is too many people got over leveraged trying to trade Bitcoin. That cascaded through everything else. Once they started getting liquidated, traders started getting their positions hit, and then that caused more liquidations and more liquidations. And that's why you get these monster moves so quickly in crypto that you don't get anywhere else. We also don't have circuit breakers in crypto. So if it starts moving down, there's nothing programmatically to stop it. You just have to have someone who starts bidding and bringing the price back up. And it looks like around 40,000 or so Bitcoin is where there are a bunch of bids set to try to catch it if it fell down there. And some lucky people, got to buy Bitcoin back down at 40,000 when it had been hanging out at 43 and 44 for a while. So that's kind of what we saw. That's the volatility, and that's just what we're going to get. There are thoughts that once there is a spot ETF approved, that we won't necessarily get that level of volatility anymore, or not quite as much, because there will be so much more volume, because there will be so many more of those market makers that have to jump in and play one side or the other. So you might have less volatility because you'll have more volume. But what we see on the weekends is generally less volume until you have an event like this that triggers all these liquidations, and then the volume kicks up because everyone has their automatic trading set, whether it's a stop loss on the downside, whether it's putting a bid at a lower amount on the upside. There are obviously a lot of bids down around the $40,000 area. That's just what we see. That's part of the beauty of having a decentralized system that is not subject to anything like circuit breakers. So that's likely what happened over the weekend.